We do our quick market update. We talk about the real estate portion of the market, and we have our mortgage specialist, Danielle DeMarco, come in and talk about the mortgage market. So what we're going to talk about today is a lot of the press around some of the projections for 2024. Big real estate companies like Royal LePage, they're predicting an 8% increase in prices in the Calgary market next year. But our own company, REMAX, is predicting the market to be flat. So you see, because of the uncertainty around interest rates, different real estate companies have different market projections.
Yeah, and there's a lot going on with that. I mean, it comes down to supply levels. It comes down to people moving here, which if you turned on the news today, you would have seen it's been a record year already. And Alberta is leading the way. So with no inventory and more people moving here, it's a bit of a catch-22. But Tim, where are we leading off with this? Our crew.
So our crew projection is last year, as you know, it was just over 4%. I think 2023 is going to end up at about 4.2, 4.3%. We're predicting about the same, somewhere between 4 and 6%. We're going to see price increases in 2024. And you can see that activity is slowing. There's less properties on the market. There's less transactions going through. But people that are buying are good qualified buyers, and they can qualify at these higher interest rates. So the market is going to continue to tick along. And we talk about this often in our office about, you know, whether it's an up market or down market, people always have to buy and sell. Whether you're just buying for your first home, whether you're moving up, whether people get divorced, people pass away, investors sell, they want to cash out, they want to buy new stuff. So the market always moves along regardless of economic conditions.
Yeah, and with interest rates where they're at, people have been holding on to see what's going on there, and we feel people will be selling next year. The other thing that we also believe, like we're telling everyone out there 4 to 6%, but that's Calgary as a whole, where we see the big boom for everybody out there that wants to invest in real estate next year is prices under $500,000. We believe that that segment of the market is going to shift at least 10% next year. And the main reason behind that, if you go and rent a property that's valued under $500,000, it's the same price to actually rent that property, or if you go and compared to go and buy it and pay a mortgage and pay your taxes and pay your insurance. It's very, very similar in cost. So people are going to be tired of, if they can find a rental property, first of all, they're going to be tired of just throwing that money away. And when they do get into the market, that segment will continue. We're just hoping, once again, that there's more inventory because that's really, really going to help us out next year.
Yeah, so we're going to bring Danielle in now to talk about the mortgage market. Danielle is our investment mortgage specialist. We talk about her all the time. She does a really, really good job for our clients, getting them not just a mortgage, but developing a mortgage plan so they can do more purchases into the future. So if you're on, Danielle, come on in.
Thank you. Thank you.
I'm going to turn the volume up for you here because for some reason it's not going to our big TV. So people in the room can hear you. And just go ahead.
Is this better?
Yep, that's awesome.
Perfect. Okay, sounds good. So thank you for the introduction. So today I'm just going to kind of expand on what Tim and Azad just chatted about as far as market conditions go. A couple things. So for starters, as a lot of you, I'm sure, are aware, watching the news and listening to rates and things like that, we're currently in a downward trend when it comes to interest rates. We've actually seen interest rates come down about 0.5% and even more, some of them almost 1% on the fixed side of things. So this means a few things when we're talking about rates. The first one is obvious. As rates come down, your mortgage payments will come down. The second one is about qualifying, though, and this is one that not a lot of people necessarily talk about. So anybody who's wanting to purchase a property, the lower the actual interest rate is, the lower the stress test qualifying rate is. Therefore, the more you can actually spend on the purchase of a home. So for anybody that's been pre-approved before or has been looking previously, now that rates are down 0.5%, you're going to want to relook at those numbers, redo the math and see, okay, well, if I could spend $450,000 a month ago, maybe I can spend $475,000, $480,000 now, which will help get you into that next potential bracket of housing that you want to look at. And then the third thing is cash flow. So obviously as investors, we like to be positive cash flowing. So the lower the rate, the higher the positive cash flow. Now, when I'm talking about rates having come down, I am talking about the fixed rates. So the variable, of course, has not really moved. The Bank of Canada did keep its overnight lending rate the same just to keep a couple of weeks ago. So that is positive as compared with all of the increases that we saw the last couple of years. Now, the second thing I wanted to chat about is the outlook for 2024. And this is where I'm going to kind of expand on what Tim and Azad said. So as we all know, government and economists, they place a huge emphasis on inflation when they're determining what interest rates are going to be, and how inflation is going to affect the Bank of Canada and its decision on whether or not to reduce the overnight lending rate in 2024. What a lot of people don't realize is that the inflation rate that the governments are looking at is including mortgage interest costs. So what we call as shelter costs and housing costs. So of course, these inflation rates are high when you factor in shelter costs because mortgage interest rates have been high. So it's kind of counterproductive. If we strip out the mortgage interest costs from the inflation rate, that inflation rate goes down. And if we exclude those shelter costs, the inflation rate actually goes down to about 1.9%, which is below the Bank of Canada's target rate. So which means really the Bank of Canada should be cutting its interest rates in 2024. However, since they don't remove the shelter costs, our inflation rates still look a little bit high. So based on that, it's unlikely that we're going to see cuts to that overnight lending rate in the first quarter of 2024. But hopefully by mid 2024, mid Q2, end of Q2, and mid to end of Q2, we're going to start to hopefully see a reduction in those ones as well. Ultimately, mid to end Q2 2024 is where we're thinking rates, we're going to start to see more of a decline. Yes, we've seen a decline the last 3 weeks. Heading into January here, we're probably going to see a little bit more, but then we're expecting it to peter out a little bit, kind of stabilize, and then hopefully again start to decline in the summer. So what does this mean for you as investors? Something we need to think about. It's going to open the market up to, possibly a bunch of new buyers who couldn't apply for a mortgage in the last year and a half because rates were so high. So they were outpriced out of the market. As we get that influx of new buyers because of the low rates, we got to think about, okay, well, what does that do for supply and demand? Again, we're increasing the demand because of those new buyers that are entering the market, but we don't necessarily have the same number of supply. So when Tim was referencing that 4 to 6% potential increase in property value, this is playing a role in that because obviously, again, the less supply and the more demand, these prices are going to start to increase a little bit as well in 2024 as a result of all of these new buyers being able to enter the market. So when investing, it's really important that you not only take rate into consideration, but that you look at the overall picture. Just looking at interest rate and trying to time your purchase around rates, or rates coming down, now is the time to buy. Well, you got to think about what the adverse effect of that is. As rates come down, more buyers enter the market. Therefore, they push property values up a bit. So rates may be down, but property values are going up. So it kind of is a teeter-totter. So what we always say when you're looking at investing in real estate is don't try and time the market perfectly. Really, what Tim and Azad are doing is having you focus more on the property itself. Is that specific property, that specific neighborhood, are you going to cash flow? So we're not necessarily trying to time, hey, when prices drop or when interest rates drop, because again, there's all those adverse effects. The lower the price, the more buyers enter the market. The lower the rates, the more buyers enter the market. The higher the demand, the less the supply, prices start to go up. So bottom line, don't try and time everything perfectly. It never works out. You'll be the guy sitting on the sidelines wishing they had invested a year and a half ago, because you can't buy anything just because of supply and demand. So bottom line, talk to Tim and Azad, talk to an investment mortgage broker, somebody that understands the investment side of financing, who isn't just looking at that next one purchase transaction, but who's actually coming up with a full plan so that you can accumulate multiple properties, and who can give you advice on, not timing the market and not being maybe so rate focused, but maybe more term focused and cash flow focused, and Tim and Azad's perspective, neighborhood and property focused. So that's what I have as far as what to expect coming up in 2024 and where we're at currently. If you do have any questions about the market, about investment financing for properties, just feel free to reach out. My contact information is there and I'll put it in the chat.
Awesome. And a quick shout out to Danielle. It was her birthday on the weekend. So quick happy birthday.
Thank you.
Awesome.